All right, Mark here. Hey everyone. Hello traders. Welcome to my Greenbridge Investing Market Analysis. This is the forecast update from my previous stream. Okay, so what I want to talk about very briefly is I want to talk about Bitcoin, I want to talk about the stock market, I want to talk about gold, going into the NFP report tomorrow, then I want to answer your questions. Okay, so with that, let's get started, and thank you again for joining me, everyone. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. And let me get my chart up here. Okay, just give me a second. All right, there we go. So real quick, before I get into the actual technicals, I just want to say one thing. I just want to address something about this environment, because we're getting people that are asking questions about where our signals are. And the thing is, you have to understand, this is an environment that's not really offering any high quality opportunities. Unlike other vendors out there or other signal providers, we don't force trades. Okay, we actually we wait, and part of the value that we provide is that perspective to understand when high quality opportunities are presenting themselves. Most of the time they are not. So we have people that are very anxious to get in on this Bitcoin situation while the risk is very high. All right, so with that being said, let's get into this Bitcoin here. Let's talk about this. But my point is, if you come to our chat room and you try us out and all that stuff, you need to understand exactly what we offer. We're not a day trader type of operation. We don't offer day trades. We offer swing trades and investment type opportunities, and they're very infrequent right now. So patience is key. I can't emphasize that enough. Knowing when to stay out of a market is just as important as knowing when to take a position or assume risk. A lot of people, they don't care. They just want action. Believe it or not, most people, they don't really want to make money. They say they do, but they're fooling themselves, because they don't actually behave in a way that's effective when it comes to actually making money over the long term. Okay, and part of that has to do with waiting. All right, so enough of my rant on that stuff. Let's talk about Bitcoin, and I will get to your questions, so thank you for asking them in the chat. By the way, if you want to see like an altcoin or something like that, just make sure you put USD after it so I know. Okay, so let's talk about Bitcoin first. Now, here's the situation. I've been talking about this over and over. We broke this 40K, right? That structure is still in play. And you say, well, how can that be? Bitcoin's going higher. Well, not really. We haven't taken out 40K. Okay, this is a problem right here. So until we take out that resistance, I mean, what's today's high? 39,490. This thing right now is at 38,545. Where is the resistance break? All right, so if there's no resistance break, and this is, by the way, this is going to leak into all of the altcoins as well. So you're going to see your favorite altcoin, oh, buy signal, right? Bitcoin is at a resistance. So if Bitcoin cannot break this resistance, even though it's a minor one, then it's basically reasserting a lower high. This is a high risk area to be taking a long, a swing trade long, very high risk. And you have all these people who don't know any better piling into this thing because they can't control themselves and they think that they're missing out on something. There's nothing going on here, okay? Let me make this nice and big. This price action that you think you see, this is nothing. Why is this nothing? Because this is not cleared yet. That's why. So until that is cleared, this is nothing but high risk. If this fails, all right, and we get a red candle somewhere, even if it touches 40K, or maybe goes to 41K, right? And we get a bearish pin bar or something like that, that's bad. Okay, most likely that's going to fail and you're going to have a lot of longs sitting in it not knowing what to do. That if in that scenario over the next few days, and this is why I'm doing the update, because we're trying to get clues as to what can unfold over the next few days. If we have a lot of longs in this thing, and it tests 32.5 or 33.5, the support, or 30K, if there's enough people in it, and if they're all banging it out, chances are those supports will break. And the bigger picture structure right now favors a bearish break, not a bullish one. This consolidation is a momentum continuation pattern, and the momentum is bearish at the moment. Okay, now let me address something else. What if I'm wrong? I could be wrong. What if we break 40K? Because right now I'm anticipating that we don't break it. All right, but the market may prove me wrong. The market may say, well, I'm breaking it. Okay, no problem. Well, once we get that break, that's a new piece of information. At that point, the market will be proving that this bearish momentum is not really in control anymore. And then at that point, we can then look for a new swing trade long. So we are forfeiting a better price for a better environment. And usually it's better to go for the better environment. Trying to get the best price is a very expensive process. Okay. So if this thing breaks, now here's the other thing I have to say. So let's say, I'm wrong again, and we break 40K and everyone's mad because, oh, you told us not to get in, and now this thing's at 43K or 42K. It broke it, and now we all have to get in now. Well, what do we lose? What do I lose by not being in it? Can anyone tell me what I actually lose from not being in it? Besides my ego getting hurt, maybe. I mean, I'm just using that as an example. But what do I actually lose? I lose nothing. Okay, my account is still the same because there was no money at risk. I could be wrong like that over and over and over, and I don't lose anything, right? I don't want to be wrong and have to lose money. That's the kind of wrong that I don't like. But if I'm wrong about the market, I simply adjust. If I don't have any risk on, I simply readjust my assessment, and now I look for the opportunity in line with the market. Okay? So that's what you have to realize. People that are anxious because they think they're missing out or they're losing out on something, that's just your human nature playing games with your mind. All right, so that's Bitcoin. Now let's talk about the stock market real quick. All right, so just to recap the Bitcoin thing, if we get stuck at 40K, I'm looking for 33K to trade. I'm looking at possible 30K retest over the next few days if 40K sticks and we get a sell signal there. All right, if 40K breaks and we start pushing 42K, 43K, then I will be looking for a pullback of some kind. It doesn't have to be a sharp pullback, but some kind of buy signal after that for a possible long. At least structure will be more favorable at that point, even though the price will not be as good. Hopefully, I'll be able to also assess a more attractive risk than what we're seeing right now. This risk, if I have to buy this thing around here, I'm looking at still around 7,000 or 8,000 points of risk, and that's just too high. Okay, especially in line in terms of fighting a bearish structure. All right. So let's talk about the stock market. All right, real quick. So look at this. This thing all week has been doing nothing, right? Look at this garbage. And now today we get this candle. This thing, the Nasdaq is minus 138 points right now. It was a little lower. Okay, this is good. Good for our SQQQ. We've been telling people to get into that. People have been asking a lot of questions about that. How is SQQQ doing? Let's see. Oh, today it's at 1144. This thing's been a real pain, all right? And we were in the options. Some people are actually taking the stock long, the SQQQ stock, which is not a bad idea. And this could be the beginning. Now, the thing is, we have non-farm payrolls tomorrow at 8:30 a.m. Eastern Time. Non-farm payrolls is the most important economic report that we get each month. Now, the previous one, as I mentioned in our show the other day, the previous one came out, it missed by a lot, and the market liked it, right? So the market may not be anticipating a good number. Plus ADP, the ADP number came out earlier today. I don't even know what the number was, but guessing by this candle, the market doesn't like it very much, okay? So that means the market is pricing in not such a good report tomorrow. Now, the thing is, you can't trade the report, right? Because the reaction around the report itself can be highly random. You have to see how the day closes. That's really more important, and how the next day behaves, which is Monday, right? So we have to see how this goes. So as far as stocks, this is still a bad place to be buying stocks. A lot of people think, oh, pullback, I'll buy stocks. This is generally a resistance area. I've been talking about this for a long time on NASDAQ. I've been trying to avoid stocks. Trade of the week, we sent out car gurus. But the thing is, let me just point that out real quick. You see, the buy stop was at 29. This thing never even came close. So was this a trade? No, it never turned into a trade. which is fine. All right, so we were able to avoid getting into this. Now, where a lot of vendors go wrong, or a lot of signal providers, they'll just react and be like, oh yeah, just buy it. You can't just buy it, okay? Because look, then you get, this would have been a stop out. But instead, we never got into this, or the trade was never active. All right, compare that to something like GameStop. GameStop broke its resistance, right? This was 2 weeks ago. We sent this out. It took about a week for this to go off, and it took a few days, and it went to all three targets. Okay, now, is that some kind of magical thing that I know, or how did I call that? Well, I know, first of all, how GameStop trades. I know when the herd mentality goes nuts in it. I know what the potential is, okay? And we were just looking for a breakout. The market just so agreed with our trade idea. So that's why waiting for a buy stop is so important. These are not reactive trades. These are planned trades, right? That's what our swing trade strategy is about, planning and having predetermined targets and a predetermined stop. We're not reacting to things. Reacting to things is the worst thing you can do. All right, but and the deceptive part of the market is it will randomly reward you for such behavior. No different than what a casino does, right? And that's where that gambling mentality comes from. All right, so that's the NASDAQ. S&P, let's take a look at it real quick, right? Getting hammered, not really, right? What's minus 14 points is not much for the S&P. And look at that bullish pin bar trying to develop. Is that a pin bar worth taking? Not at this location. No way. All right, so we have to see how this goes. This could be, the possible lower high, but here's the thing. Markets that are at resistance levels, typically, if the market's going to reject them, they usually reject quickly. They don't stick around like this. So this is very conflicted, right? Very conflicted. So we've been trying to stay away from market stocks, stocks that are highly correlated to the S&P for that reason, until this S&P chooses, until it makes a clear choice or shows its hand. Right now, based on this structure, this could break higher, all right? I mean, it's hard to believe that it can do it, but it can do it. So I want to see how that goes. That's why I'm very, I'm very cautious with the stocks and not very interested in calling longs for swing trades. We're at a high, okay? I don't like to buy highs, as most of you know. I like to buy supports in stronger markets. This is not a support, so it's very conflicted. All right, let's talk about gold real quick, and then I'm going to answer your questions. So XAU, USD, as many of you know who follow us, right? Let me point this out. So that was a swing trade. I've talked about this many times, right? That was a swing trade that I called, three months ago or whatever, back on March 30th, and that was over here in this area. So it went to all three targets. It took 2 months, 2 months to go through all three targets, right? 1880 was the third target. This thing is now at 1872. It went higher than the third target, but I don't care. We got our third target, and it was for over 2-to-1 reward risk. I was happy with that. Now, I want to ask you all a question. Have I been talking about gold as a long in recent weeks? Have I been saying, buy gold, buy gold, buy it, buy it, buy it? I have not been saying. I haven't been talking much about that. I've been pointing out where it is, but we don't buy near highs. We wait for this. Now, if you notice, I've been noticing ads all over the place. Buy gold for this, buy gold for that, gold, gold, gold. Right, at the highs. Thanks a lot. Thanks, Captain Obvious. Right, so here we are. We got this red candle. Is gold, have gold fundamentals changed? No. Maybe, gold is obviously reacting. I'm guessing now because I pay no attention to news. I'm guessing that ADP came out worse than expected, which means the Fed has a reason to raise, better than expected, right? And the Fed now has reason to raise interest rates, okay? Or it gives them an argument. That's how the market thinks, all right? Anyway, that's my assessment. So if the ADP report came out slightly better than expected, that means the Fed, like I said, this is about interest rates, okay? If the market comes out bad, if ADP or unemployment comes out really bad, the Fed can't raise interest rates because it makes the interest rates will be bad for everything, higher interest rates. But if the reports come out slightly better, then that takes away from the argument, right, that they can raise interest rates, which means, you know, bad for gold, right? Higher interest is bad for gold. So if that makes sense. All right, we'll revisit that. Anyway, my point is this: gold is pulling back. That's what we want to see, because we want to take another long when this thing stabilizes. When all these people that bought the top bang it out. We're looking at what? 1850 area, 1840 area, this support right here, 1841. So it's only 30 points away. We'll see if it can get there and how it behaves there, and maybe we'll get a new swing trade long. As far as our investments with all the stocks and stuff like that, like look, wheat, precious metals and everything, I mean, yeah, they're pulling back a bit, but that's not really much to worry about. I mean, that's not a big deal. What's the other one? AG. AG actually reached what? Its first target, let me see, 1893 was the high the other day, right? And 1835 was our first target. So, you know, now we only have 2/3 of the position on anyway, so it doesn't matter, right? I'm a strong hand. I don't care. If it wants to pull back to 15, go ahead. You know, I still have some, but whatever, right? I'll look to buy more. As long as gold stays in this general configuration. That's the story. So now we wait for the new swing trades, okay? And that could take a few days. You don't step in front of this. All right, so those are the main things I wanted to cover. We'll get back to that idea with the interest rates. Now, I'm going to get to your questions. Let me just take a look at one thing here, and that is ZN. These are the bonds, okay? These are the bond futures, 10-year note futures. And look at this red candle here today, right? So forget this gap. This gap is some kind of adjustment, so don't worry about that gap. But the close, right, this is a bearish close, it looks like, and it took out yesterday's low. So if this is going lower, that means interest rates are going higher, okay, is what that means. So that explains the negative gold. And the euro got beat up in that too. Yeah, I want to talk about that more before we wrap this up, because that's an important idea to keep in mind. All right, let's get to your questions. And let me go back. Let me just reset my chart here. I'm going to go back to Bitcoin. All right, so let's see what we got. Hey, Wedge, good to see you. Ian, would be interested in your views on what signals or data to look for to suggest that institutions have finished dumping BTC. There seems to be a lot of uncertainty still, which goes with wave 4. I know what... Okay, well, so here's the thing. There's no way to know, right? It's really the sign that I'm looking for as far as the broader picture, the bigger picture trend getting back into play. We need to take out 50K for that, okay? We need to take out 50K, and then we need to develop a higher low. But even then, I'm going to be somewhat skeptical, because this little wave, this situation right here on Bitcoin, that's not the wave 4 that I refer to. I'm talking about a large magnitude wave 4. This is wave 4. Okay, this whole area right here is all actually going back to there. That's all wave 4 so far. Okay, this little price action over here, this little consolidation, that's actually a mini wave 4 relative to this bearish movement, which means we may get a wave 5 lower in that situation. So to answer your question, as far as bigger picture consolidation, in order to confirm that we're out of wave 4, this thing needs to break the wave 3 high, which is what this actually 65K isn't the wave 3 high. It's 61.7, right around there. It needs to go up there and clear it. So we got a long ways to go before something like that. But here's the thing, like it's just like with gold, right? Because gold was in a wave 4 for like 8 months, and then we had this move right here, right? This move, this bullish movement, could be the first leg of a broader wave 5. So we didn't avoid gold because, you know, when gold was in that wave 4, we found the bottom of it and we bought, okay? So if this is wave 1 of a broader 5, now we just look to buy the bottom of the wave 2. If we get that. So same situation will occur with Bitcoin. So we're not going to, all we can do, we can't sit here and say, you know, when this specific sign goes off, that means, you know, we can go all in. It doesn't work like that. So right now what we're looking for is a bottom to establish itself and be pretty clear, right? Right now that bottom is 30K. So if we get another test of 30K and it holds, we're willing to take risk. And that's not a bad place to be even putting on inventory, okay, because it's a nice low price. And if that holds, great. And at some point, if Bitcoin starts working its way higher, then we'll get those confirmations. But we want to be in way before those confirmations, because when you're talking about Elliott wave confirmations, by the time you get in, half the move is over, right? So you need to spot signs earlier and be able to take risks in an environment that's not exactly confirmed, okay, when it comes to that type of thought process. So I hope that answers your question. Hey, Jesse from Poughkeepsie. I think that's Jesse. Yeah, there you go. That's right. Thanks so much. Okay, no problem. Please give some more detail on your SQQQ. SQQQ option premiums are cheap. Options still bullish on NASDAQ. Okay, so here's the thing. SQQQ is the short, right? This is basically a long, you can buy this instrument and basically be short the NASDAQ, right? That's the whole idea behind this thing, instead of having to short it. So option premiums, the time decay on these things, first of all, is ridiculously high. So it's not a good idea to buy the options. In order to make money with the options, the thing needs to move like fast, and it needs to move quickly. We need to see like a 5 or 10% move in the NASDAQ, and it has to happen in a couple of days. That's very low probability, okay? Meanwhile, the NASDAQ spends a lot of time doing nothing. It pulls back 200 points, and then it rallies back up 300 points. Then it pulls back another 200 points, and then it rallies up 150 points, right? So it just, all it does is been wasting time. I have January options, and they're in the red, okay? And I took those at the NASDAQ high. So it just goes to show the time decay is not favorable at all. So the way to play this is with the long. Just buy the stock outright. Buy the SQQQ outright. At least you're not exposed to that high theta decay, right? So in a situation like this, your stop needs to go around 10, 10 and a half. And, you know, targets, you're looking at maybe 14, maybe 15. The reward risk is pretty good here, right? So you only have to risk maybe $1, right? $1.50 to go for a $2 or $3 profit. That's all you're looking for. And then if you can get a runner from there, but like I said, keep in mind, you know, we're fighting a stimulus market. So while the NASDAQ looks like it's trying to pull back, we're still fighting a stimulus market. When the Fed stops with this easy money stuff, that's when you're going to see some major moves. I don't know when they're going to do something like that. So as long as they keep with their vague talk, and, you know, they're not raising interest rates and all this other stuff and blah, 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 this market's going to keep finding buyers, right? Because there's still a lot of free money floating around. That's very hard to be short this. So there'll come some point when the Fed will have no more choice, right? And they're going to have to do stuff that the market's not going to like. And when we'll see that, you can't really anticipate that. But the market will start breaking levels, important levels, right? The important level on the NASDAQ is what, 12, basically 13 even, basically. We clear that, we're probably going to work our way much lower. All right, but as you can see, we're still a long ways from there. We're like, what, 600 points away from there. So taking shorts here is aggressive. That's why I would say, you know, you're better off working with the long instrument, like an ETF, like a stock. Buy the shares outright than the options. They waste way too much time on the long side. All right, so that's how I'd answer that question. Thank you for asking. Okay, if possible, TXT stock. Let's take a look. TXT. So what is this thing? Textron. Well, I mean, that's a nice clear-cut bullish trend, right? This thing tried to break out of this little consolidation here. That's all nice and everything. I mean, clearly the stock is strong. How much is this thing? $68. But the problem with it is you're buying the top of the market, right? I would never buy something like this up here, especially since it might be a failed breakout, right? You have it tried to break out and it's kind of hesitating a bit. If the S&P and NASDAQ were at much more favorable levels, I'd be open to something like this. But otherwise, no way, not at these levels. Something like this, you have to wait for a support, okay? I see only two supports. I see one here at 64, basically, right there. I see one there. And after that, you're looking at like this level here, which is 55. So between 64 and 55, I mean, that's your area where supports can develop. If it doesn't want to pick one of those two prices, that's what you should be waiting for as far as an opportunity goes. These environments where markets are like in really bad locations and the risk is high, this is a good time to find these levels and annotate them. Make sure write them in your notebook or whatever, write them somewhere. So if the market revisits those levels sometime in the next couple of months, you have a plan, right? You're prepared because you have a predetermined level that you're anticipating rather than reacting to something. So that's how I would treat that one. Like I said before, I'm not very optimistic on stocks, especially stocks that are on their highs. So thanks for asking about that, IFC. Hey, Shubham, good to see you. Anthony, nice to see you. Ed, all right, Texas, nice, welcome. Shubham, gold looks weak. Right, so gold is just pulling back, overreacting. Okay, like I said before, people are overreacting. People who shouldn't have bought the top, and we're just waiting for a buying opportunity. So this bearish candle is definitely a sign of bearish momentum, right? And we'll see how far that momentum can go. Like I said, I'm anticipating support around 1850 area, and we'll see how price action behaves there. Let's see what else we have here. Emil, hey, Emil, good to see you. Zelta. From Latvia, nice. Hey, oh yeah, people are mentioning like where they're from. If you want to mention what country you're from or what state, so it's just a fun thing. I always like to see where people are from, especially like on TradingView, because we get people from like all over the world there. I'm broadcasting, if you don't know, I'm broadcasting from northern New Jersey, just outside of New York City, in case you couldn't tell from my accent. Anyway, it's always interesting to me how many different parts of the world come together. Except like I get only one guy in New York. I got Jesse from Poughkeepsie. But you know what, Jesse? I had a guy from New York City the other day in my chat. And I even had a guy from New Jersey, from Princeton, New Jersey. So, okay, I'm getting around now. All right, I'm starting to get a little more popular. Okay, got a guy from Jersey. So that means, I'm getting somewhere. Anyway, okay, cool. So let me see what else I have here. Any levels to re-enter Ford? All right, Anna, that's a good question. Ford. So Ford is going crazy now. I mean, this thing looks like an altcoin. Look at this thing. As you know, Andrew called this a long time ago. He called this one months ago long. And I mean, this thing is now at $16. So obviously you can't touch this thing when it goes vertical, especially something like Ford. Now, so Anna asks, where can you get into something like this if you missed it? Well, you have to look at the supports, right? And here is the first support level, is right in this area here, this old resistance area, which is around 13.5. So if Ford can pull back to that area, 13.5, 14, somewhere around there, that would be a good spot to consider a long if it can reverse there. All right, this, by the way, was not a swing trade. This was a position trade. So not a good one for swing trades. I mean, now it looks good because it had this crazy move, but most of the time, Ford is mostly, not much of a mover. So I wouldn't really consider this one for a swing trade. So that would even go for position trades. It pulls back to like that kind of support level. That would be the place to pick some up and see where it goes. It might not pull back that low. It might find support slightly higher, but that's going to be very dependent on the price action. You have this gap right there. Typically, gaps act as support or resistance. That's around 14.5. So those, 13.5, 14.5, those would be those would be good prices to consider. A pull back upon price action confirmation. This right here, you can't touch it. Cannot touch this. It's vertical. Hopefully people that bought vertical markets back in February hopefully learned their lesson. But, a lot of times they don't. So, okay, anyway, that's Ford. Thank you for asking about Ford. It's a nice winner there. Andrew's good at calling those longer term ones. Okay, let me see. Let me see what else I got here. TRX. Tron, okay, and Dodgy. Okay, let's take a look. So TRX, I haven't heard from this one in a while. I guess it's not really popular anymore, right? Well, okay, not surprised. Look, this looks very similar to the Bitcoin situation, right? You have, and the broader trend is still generally bullish, but here's what we're fighting against. Just like Bitcoin, this structure right here, that right there is not a bearish trend, but it's a bearish structure on this time frame. When I'm talking about trends, I'm talking about relative to the daily time frame, not smaller time frames. So this same situation going on with Bitcoin, gyrating in a potential lower high area. This is a potential lower high area. Bad place for new longs. So what is that? Around 10, low nines, about 10 cents. Okay, just about that 10 cent area. That is turning out, it's possible, it's a possible lower high. So again, the whole point of like this whole session here is to try to gather clues so that we can better anticipate what is likely, what kind of scenarios we can see over the next few days. If this lower high sticks, meaning we get a bearish candle, whether it's an outside bar, a pin bar, just like Bitcoin, and I would imagine Bitcoin will do something very similar because it's the leader, then I'd be looking for lower prices. Okay, just like Bitcoin. So lower prices on this thing, you're looking at about 8 cents around there. That's equivalent to the 30K test on Bitcoin, right around this area here. Okay, so that's, if you're looking to pick up some inventory, that's not a bad place to do it, even if it breaks. Now, like I have to say, with inventory, you can't, like, when I talk about inventory and swing trades, those are two different things. Inventory is not as price sensitive. You don't have to have exact prices. It's just nice to get, you want to step in front of it at a support level. Okay, cool. Your probability is better in such an area. But if it clears that support, you're looking at lower prices. The whole idea behind inventory is you don't get so big so you can handle the break and it goes lower because you're planning to average more. You're planning to, buy some more at lower prices. But the key to that, a lot of people I've been watching these gurus on YouTube and stuff, and they're saying, yeah, just dollar cost average. Right, but they're not giving any specifics. So the key to something like that is your sizing. You have, and that has to be relative to what you're planning to invest. So like I always bring up $1,000 as an example. You're looking to invest $1,000 and only $1,000 in TRX. Well, split that up into 10 $100 increments, and now you have 10 purchases, and you can spread that out, those 10 purchases all over the place, some at lower prices, some at higher prices, and now you're getting an average price. Once you reach your $1,000 allocation, you're done, okay? And then you let the market work, do its work after that. The reason for that is if it continues to break, because again, there's nothing safe about these things. They're not investment grade, as I talked about. Many of these things can go back to some ridiculously low prices. It's hard to believe, but it can do it. If you keep pouring money in because, oh, my favorite guru just said to keep buying more and more and more and more and more, you're just throwing your money out the window. That's why you have to have a target allocation, and then you stop. Once you're all in, you stop. So that if the market does go to zero, that's the most you're losing, okay? That's the best way to treat that. Again, these are not stocks that are regulated by the SEC. This is not Intel. This is not Walmart. This is not Home Depot, Microsoft. Stocks that have solid business models. They pay dividends, and they're going to be around for a long time. These are garbage coins, most of them, and there's no oversight. There's no regulatory oversight, which means the developers and everyone else, they can say and do whatever they want, and it doesn't matter, and they're just taking your money. Okay, you have to look at it that way. They're like penny stocks. Okay, so that's my rant there on TRX. Let's take a look at Dogecoin. These things, a lot of them, they provide no real value. A lot of them are just big bright ideas, which it's fine. There's nothing wrong with that. But my point is they're highly speculative. Just like the .coms were 20 years ago, most of them are not listed. All right. So here we go with this thing, Dogecoin. So you have this break, right? Of course, it's sucking in all the who trades this thing? I see people that are mentioning this thing. When I see certain people mention like this coin, people that I know, and they're like, when I see these particular people who have no idea how markets work, and they're buying this thing, I know it's a garbage coin. Okay, and that's where this thing is sucking in. Anyway, so you get this push here, right? Okay, that's a bullish sign, but this thing is not going to go very far if Bitcoin doesn't agree with it. Now you're getting this inside bar situation right here. So I would regard this movement as noise. I would regard this as noise, even though it looks promising. All right, and the reason why I say that is all this price action back here is similar to the Bitcoin situation, which means it's still a follower. As much as it doesn't want to be, or people hope it's not, it's still a follower. If Bitcoin breaks, this thing's going to break too. So this is a really bad price to be getting involved in it. And this is not the best one for swing trades. Andrew called a swing trade a couple of months ago, right, about a month ago maybe, or in this area. I know he made some money with that, but part of the position anyway. But right now, I would let this thing pull back a bit and let this thing settle. Again, these things don't trade on their own. So if Bitcoin can't produce a quality signal, this thing is not going to produce a quality signal either. If what I would wait for on something like this, okay, especially for a swing trade, is if this candle right now turns out to be an inside bar, or it pulls back a little bit more, okay, into this area here, 36 cents, right in this area here, gives you a little higher low, and Bitcoin is doing something similar, or Bitcoin is giving another buy signal. Perhaps Bitcoin is pushing off 33K or whatever and giving a buy signal at a higher low there, and they're matching, then okay. You know, you want to take a chance with it? Okay, at least Bitcoin is doing something similar. If Bitcoin is not doing anything and this thing is all trying to be all whatever, it's probably being hyped somewhere. Okay, so I would just avoid it. Anyway, so thanks for asking about that one. I hope you found that helpful. Eligius, Lithuania. Cool. Oh, I appreciate it. I'm glad you like my videos. I'm glad you can appreciate them. Are you the Monday guy? I know I have a guy from Lithuania and on my TradingView stream, and he says he likes Mondays because of my stream. And I'm like, wow, that makes me feel really special, because I don't like Mondays. As much as I try, I still just don't like them. Anyway, thanks. Okay, Mario. Hey, nice to see you. Schwartz. Hey, good to see you. Thanks for joining. Kaz, search BitGoats. He shorted the top at 65K, targeting 30K. Live streamed it. Okay, he's been buying Bitcoin. Okay, well, thanks for letting us know. But at least he shorted it at 65K. I mean, that was aggressive. I'll give him that. We had a guy in our chat, Kavi. He shorted it like around 58K, and I don't know how long he held that for, but that also would have turned out nice. We don't short Bitcoin. Anyway, all right, Ayed, is BTC need to close above 42K on daily or weekly candle in case to go to 46K? Okay, so that's a good question. Let's go back to Bitcoin. So the thing is, I'm looking at the daily chart only. All right, weekly chart you can look at for some bigger picture stuff. I'm not against it, but I prefer the daily because I can see some more granular levels that way, especially for swing trades, which is really all I'm interested in. So it needs to clear 40K decisively, meaning it breaks it and closes above it. Until that occurs, I am not enthusiastic about this. Okay, I mean, look, you got a guy here promoting someone else. I mean, spamming my chat basically, and you know, you gotta have guys like that are just, you know, it could be a gimmick for all we know. I don't care if he live streamed it. You know, if he's not giving a clear explanation as to how he's doing it, or if he's charging people money to pay for some whatever, then, you know, you can't really trust people like that, for one. For two, he's buying Bitcoin now. I don't know why. There's no buy signal. All right. So anyway, look, and we don't have to agree. I listen to charts. I don't listen to people ever. All right. So let's see. Ian, if you have time, can you explain why the larger wave 4 Bitcoin started at 617 and not the all-time high? Okay. So here's the thing. This was a very tricky wave 4. You have to understand something about Elliott wave, right? Like the waves don't just show up like the ideal, what do you call it? The ideal configuration like that we read about. So wave 4s, after wave 3 completed, you have to be able to count 5 waves. We were able to count 5 waves here, right? At this 61.7, all right, that high. That's why I'm saying that was the top of wave 3, because you can only count 5. When you count this wave 3, from the wave 3 bottom, the wave 3 bottom was like way back here, right? Back in October or whatever. So this entire impulse, right, this section right here, this middle section that you can see, that's the wave 4 of 3. And then we get this one more 5 wave impulse. And like, oh, okay, that's cool, right? And then you get this thing here. So if we count all that, right, this 5 wave impulse, I'm sorry, this right here from this low, this mini wave 4, I'm going to call it a sub wave 4 low. Then you have this here is a wave 4 relative to that impulse, and then we get this leg here, which makes that higher high. That's wave 5 of the broader 3. After that wave 5 is in, we start getting corrective waves. That's the beginning of wave 4. Okay, so the thing is, we had this 3-leg corrective wave right here. That's your wave A. All right, then we have another 3-leg corrective wave, which is the tricky wave B, which goes to the all-time high. and sucks a lot of people in thinking, oh, this thing is just going to keep breaking higher. This is a failed breakout. If you notice, it's 3 legs. That's a corrective B. It's called a running flat, is the Elliott wave term for that. Okay, and it makes that slight higher high. And then you get this C wave. Okay, and then you get this, what looks to be like this little mess right here, which we can argue is probably like a connecting wave, which a lot of times they'll label that like an X wave. All right, so wave 4 is, there's no guarantee we're going to get like a 3-leg correction. A wave 4, or any corrective wave, can be a compound correction. So they're usually connected, right? So you can have like a running flat, like this situation right here, like this running flat situation. You can have something like that connected by some random structure, and then you get some other structure, and then that can connect to something else, right? So it gets very complicated. That's why there's no reason to beat yourself up trying to figure out wave counts and stuff like that, right? Like I like to use the term loosely. I like to use them where, hey, they give me an idea. If I can see the waves clearly, then I will look for information there. If I can't see them clearly, then I don't use them, because they will only confuse you. Especially Elliott wave cannot be used in absolutes. So and then what I'll do is I'll just look for subwaves and stuff like that. Like this broader movement here, that's an impulse clearly, right? If that's an impulse, this is probably the wave 4 of that little mini impulse, and we may get a wave 5. I mean, that's how I use that for just a general idea. It's like a general roadmap, but things change. I put more weight on support and resistance levels and structures and price action. That's what I put more weight on. So that keeps my mind in the right place. And I don't get opinionated, because one problem with Elliott wave that I found very early on when I used to use it, it would get me, I would become opinionated, and then I would expect something from the market. You cannot expect from the market. You have to say, okay, there's the possibility of this happening, there's a possibility of that happening, and then the market needs to provide the evidence, or it needs to show its hand. At that point, then you can assess risk and possibly take a position depending on what it is that you're trying to do. You know, for Bitcoin, for example, we don't take shorts. We do not short Bitcoin or altcoins. We don't use leverage for this market. So that cancels out one half of the equation. All right. I know a lot of people, they take shorts and this and that, and there's so much money in the short side, blah, 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 blah. Right. I know a lot of people that lost a lot of money on the short side because they have no idea what they're doing with the leverage. We don't do that. We only stick to one side. And if the market's not offering any opportunities on that side, we don't trade it. There's plenty of other markets. You know, we got the stock market, we got Forex, which we've been, not too active in. There's CFDs. There's plenty of other things to get involved in. And we short other markets. It's just Bitcoin that we don't short. Anyway, okay, so let's see what else we got here. If you have, okay, so I went over that. POW. Take a look at IEA. Let's take a look. IEA. That must be a stock. Oh, here's an interesting stock. I like it. Infrastructure and energy alternatives. Well, Powell knows like our general style, and he's been following me long enough. So this is a nice broad movement, right? Nice broad bullish trend, and then you have this nice corrective movement here. This is nice. I like the consolidation because now it's finding a broad higher low support. I like that. All right. And let's see, what is that level? That's around 11.5, around there. So you can define your risk from there. On top of that, you have this little higher low that's developed the other day, and it's trying to break a little higher. This is a nice look for a swing trade, definitely. You can define your risk. It's near a higher low. Now, obviously, this is energy. I see infrastructure and energy alternatives. So I'm guessing this is going to work alongside energy stocks. I mean, I don't know anything about the stock, but look, structurally, right, from a technical perspective, you're looking at basically $11 as your risk, right? $11 would be your stop, would have to go around there somewhere. What's this thing's at $12.30 right now, so you're risking about $1.25, maybe $1.50. The question is, what kind of profit potential can you expect, and is it worthwhile? So let's see, 16.10. That's this area right in here. So you're looking to make $4 and you're risking less than $2. Hey, that's worthwhile, right? Because getting back into the middle of the range is pretty reasonable, right? Over the next few weeks. I would say this one would probably takes weeks to move. I mean, look, this thing back in what, January was at $24 basically, and it went, what, May, in the beginning of May, early second week of May, it was at, what is that, $10 just about, or $11. So it took a few months for it to move $10. So it's a slower mover relative to some of these other things we look at. So yeah, I would say over the next few weeks, that's not a bad idea. I like this idea as a swing trade. Okay, I would send something like that out. Yeah. So that's a good one. Thank you for bringing that one up, pal. I may have to steal that one from you. Thank you. Okay, let's see what this. Cheers from Tunisia. Oh, nice. Nice. I know where Tunisia is. Cool. Very nice. Thanks for joining me. Nürburgring. I'm sorry if I pronounced your name wrong. Okay, I appreciate that. Thanks. Okay. Was what I was looking at. Oh, I'm sorry, Ian. You know what? I can't read. So I have a hard time seeing symbols. So this was the one you were talking about. Okay. Thanks for mentioning that. So I spent all that time on Doji for nothing, but hopefully some people were involved in that and they got something out of that. All right, so this is an interesting coin. I'm not familiar with this one at all. Not a very attractive name. Okay, anyway. So look, you had this consolidation. This is interesting because the broader structure was bullish. Look at this at the February highs, right? Look at this nonsense. Look at this. Is that a bad tick, or was it really up this high? This was just a great example of all the hype, right? Like you see that guy spamming my channel earlier, hype. So here's the thing. You had this consolidation, and theoretically, it should have found support, which it tried to. It should have broke higher. Instead, it broke lower. So that's not what you want to see. And a lot of these garbage coins are going to probably do something similar to this. So now this old support area here on that consolidation is likely to act as a resistance. I wouldn't go near this thing long. This is, if anything, if I was going to short these things, this would be a short. Okay, this would be a short idea because you're going back into a resistance that used to be a support, and that range broke. So definitely not a long. I would just stay away from this thing. Now this can change if we retest the low, which is what 8.5 cents around here somewhere. Retest the low and it delivers a double bottom. If it could do something like that, that's the first sign of a change. Meaning, okay, so maybe this bearish momentum, maybe it's losing its control, and you can now start looking for longs again at that point. But that would still be an aggressive long. The more conservative long is it pulls back and then takes out this high, the resistance high, which is 89 cents around there. But right now, you need to clear this old support, new resistance, which is around $2.50. You need to get back up in there, just like Bitcoin needs to clear 40K, right? It's a similar situation. I would stay away from it. So thank you for asking about this one. That's what I like about doing these streams. People will bring up coins and things that I'm not familiar with, I don't pay much attention to. And as a community, we all benefit from these things because it puts new information on our radar. All right, so let's see. Can you draw wave 1, 2, 3, 4 for understanding? All right, so I guess you're talking about Bitcoin. Let's go back there. All right, so he's asking about my wave count. Well, here's the thing. So I'm going to start with the broader wave. If I go all the way back, okay, you can see I have like little numbers back there on my chart. That was the original wave 1. Okay, the wave 1 I'm sorry, that's the wave 1 of 3 since the 2017 peak. Okay, right? The 2017 peak was back here. That's your actual wave 1. And it peaked at whatever, 20K almost. Okay, then it pulled back and gave us that broad wave 2. You see that broad wave 2 went on for about 2 years, just about. Okay, and it found its bottom in March of 2020. So that's where wave 3 potentially began. But at that time, I mean, if you go back and look at all our reports, you could read all our stuff from that time. It was potentially in a wave 3, especially when it broke 10K and 14K. I talked about that many times. Okay, and then it put in its 5 waves, right? It put in its 5 waves, right? And here's the March low right here. That was the bottom of the broader wave 3. So we had one of three. We had the wave two of three, which was this consolidation. As you see, it was all over the place for about a year, almost a year, whatever that was in there, right? And then the March low, it found that March low at 3,000. And then it started to go, right? That's where, when it started breaking 10K and 14K, that's when we were getting confirmations that we were most likely in a wave three at that point. But even then, you know, we couldn't tell you it was going to 60K, right? We didn't know. All we could tell you is that it's bullish and that higher prices were much more likely. And at that time, we were, you know, 20K was the big number, then 30K, right? Then 40K. But so to label the wave three, you have wave one is here, right? Wave one, I'm not going to put the numbers, I'm just going to give you boxes. That's wave one of three right there. Then you had this little consolidation, okay? Wave two, that's your little wave two. And then you have this wave three, right, up to this point, which is what? 20,000, right? That was the wave three of three. Then you had this little consolidation area here, right, which is your wave four area. Then you had this mess, right? This is the wave five of the three, and it was the most aggressive wave five extension. I mean, we had all this. That's wave five. You can count 5 waves in that, right? You have the little one. This is a 1, 2. This is the 3 of 5. Consolidation is the 4 of 5. This is the 5 of 5 up here, okay? And then after that, wave 3 is complete, okay? And then you have this mess afterwards. You have this mess. I'm sorry. No, this whole thing right here. When I make the chart real small, it's hard for me to see all the stuff. This whole thing right there is the wave 5 of 5. This whole thing, okay? And then after that, it turns into, you know, you start getting the corrective movements, which is the wave 4 consolidation, the broad wave 4. So I hope that helps without me having to put numbers on the charts. Thanks for asking about that. What are your thoughts on Riot blockchain? So that's a good question. It's a stock and it follows Bitcoin, okay? So Riot, if I could spell it right, R-I-O-T, it's following Bitcoin. So right now, I mean, look, this thing caught a lot of people because it was following Bitcoin. Now it's turning to garbage, right? Here's the thing. So you have all this structure here. If Bitcoin can't get its act together, this thing is not going to get its act together anytime soon. So you have a potential lower high in place. Look at this, right? This is what you have to watch out for. Just like that coin we just looked at, you have this previous low at 33.5, okay? And you have a new, that old support is now acting as a resistance. As you can see, we have a red candle off of that today. So that's a potential lower high. I wouldn't touch this thing, wouldn't go near it. If you're looking for longs in something like this, I would look for the low at 21.5. This area right here, maybe slightly higher than 21 if it can deliver that, and then give you a reversal. But Bitcoin will have to be doing something similar. If Bitcoin starts breaking its supports, this thing's not going higher anytime soon. So all these stocks that are, you know, relative to Bitcoin, I mean, let me take a look at CleanSpark. This is another one. Look at CleanSpark. CleanSpark, not too long ago, got into the Bitcoin mining business, right? Now look at their chart. It sucks, right? And it's because Bitcoin is not performing. Similar situation here. So I would hold off on these until Bitcoin can prove itself a little bit better. So thanks for asking about that one. Let me see what else we have here. I learned so much just by watching you talk about charts. It's like fast track. Thanks, I appreciate that. Yeah, you know, I try to provide quality technical analysis. I mean, it's nice to have people that are interested in it. A lot of people are not interested in technical analysis because they don't realize the value that it provides. So cool. Any other questions? I think I've answered all the questions. I want to, while you're asking your questions, I want to talk a little bit more about that interest rate situation. So, because this is going to be important for NFP tomorrow. Now, I'm not one to trade on fundamentals, right? But some piece of news, which a chart cannot tell you is coming, can change information on the chart. What makes a good trader is not their analytical skills, really. It's really how they adjust to new information. I guess you can call that analytical skills, but it's not like, my point is, you don't have to be like an Elliott wave expert, right? Or you don't have to be like a charting expert. It's really just about adjusting to new information. It's really just about being flexible and understanding what information carries value and what information does not. All right, most fundamental information carries no actionable value. All right, so let's go back to, let's take a look at, let me see, something, interest rate. I want to see, let's take a look at the dollar. Okay, let's take a look at the dollar. So look at the dollar. All right, the dollar index. Now this is important because, I mean, look at this. This is a big move for the dollar. Higher low off of here, and it's breaking. The dollar has been generally in a bearish trend, generally. Okay, lower highs, and it looks like it's struggling now to make that lower low. Doesn't want to make the lower low. That implies something. That implies interest rates. So that, going back to the ADP report, because I think I was confusing all the information. I don't want people to be confused. You have to understand something about a market, any market, and that is, you know, people go into this with the preconceived notion. When you're starting out, or even if you're, you know, a couple of months into this or whatever, people start out with preconceived notions. They also have some sort of ego. They also have some sort of overestimation bias. We all start out this way. So we go into this and we apply conventional logic. That is human nature, okay? Now, a financial market is not a what you see is what you get type of environment. The physical environment is, you know, when you see a chair and you're like, oh, look, a chair, and you sit on that chair, you know that the chair is going to hold you up because it's there. It's a physical thing, and you know for sure that if you sit on it, you know, you're not going to, you know, the chair is going to support you, right? Well, the market's not like that. Imagine you see a chair and you think it's there, right? But then you go to sit on it and it goes away, right? It vanishes. That's what you're dealing with the market. What you see is not what you get. We cannot see what's going on inside of these candles. We cannot see the true buying and selling activity. No matter what you think with your Coinbase Pro platform or your Binance platform that shows you their fake order book, I call it fake because all you're seeing is the tip of the iceberg. You can't see specific accounts. You can't see how much money is that in that account. You cannot see where they're placing their real orders. You cannot see any of that. You also cannot see where they're acting with market orders, especially large ones. You can't really see it. Okay, you see after the fact. Okay, but Binance or Coinbase or whoever, they have access to all that information. They can see it. Now, whether they know what they're doing with it is a different story, but they can see the true order flow. All right, we cannot. So we have to guess. My point is, you cannot use logic in this type of game because it won't help you. That means all news, all that stuff that you get from other, you know, free sources is completely irrelevant to price action. The best we can do is we can judge, you know, what previous structure, what price has been telling us previously relative to what it's doing now. That allows us to adjust. So so going back to this dollar situation, right? The dollar was generally bearish, which implies lower interest rates, okay? But now it's changing. It's trying to change. A bearish market doesn't do this. A bearish market doesn't hold supports. It's holding a support. That's not what it should do. It should break the support, especially with these lower highs, okay? But it's holding supports. So what that tells me, again, because I don't know what the outcome of the ADP report was, but what that tells me is the outcome is putting the Fed in a position to raise rates. That's what I was trying to say before. I was like all over the place with the explanation. No matter what the report was, the way the market is processing it based on what the US dollar is telling us, because the US dollar likes higher interest rates. It makes the dollar more valuable. So the ADP report and possibly NFP tomorrow, because this is what this is all about, NFP, you know, is saying that interest rates, an interest rate hike is likely sometime in the future rather than lower interest rates. The Fed has been very slow to talk about that stuff, or every time they give a little hint or something, they have to take it back, right? So that's a big conflict right now, is this interest rate situation. If they're forced to raise for whatever reason, again, I'm not trying to anticipate the Fed, but if they raise interest rates, that's bad for everyone and everything. Okay, it's bad for loans, it's bad for homes, it's bad for everything. So that will knock the wind out of the market for sure. And the Fed knows this. That's why they're very careful, right? They're very, very careful. Now, they don't always have to announce what they're going to do. They can go into the bond market, right? And that's why you have to keep an eye on the bond market in these situations. So I look at the 10-year note. And let me go back to that. Hold on. ZN. Let's go take a look at the 10-year note, right? The bonds. So the way bonds work is the price of the bond. If the price goes lower, it's inverse to the yield, right? The yield is the interest rate. So if prices go lower, yield goes higher, or interest rates go higher. This price is going lower, okay? So again, we have a lower high here. This trend has been bearish for some time, and it looks like we're going to continue it, okay? So if we break lower on these bonds, you see recent time, prices have been trying to work their way higher, right? Which meant interest rates were stable or going lower, right? That's what that meant. Market likes that. But this is not good in terms of interest rates. So if this continues lower and breaks this support and we get a sharp move, again, bonds take forever to move. It's not like they're going to do this in the next few days. They can take weeks to do this. But if they do it, and the Fed can use treasuries as a tool, they don't have to talk about it. They don't have to go on Bloomberg and announce it. They don't have to, right? It's the Fed. They can do whatever they want to do. So if they do stuff and they start pushing bond prices, they basically sell bonds, interest rates will be going up. So you have to keep an eye on that, especially because it can affect everything. Now, I'm really emphasizing on that stuff because right now, at this moment, let's go back to Bitcoin. At this moment, Bitcoin is not really responding to the stock market. Okay, like let's go back to the NASDAQ, right? NASDAQ is ugly today, right? Minus 160, and the Bitcoin is up on the day, okay? So there's no reaction right there. But if there's a sharp sell-off in the S&P and the NASDAQ as a result of this interest rate situation, that's when you can get a sharp move in Bitcoin, because you know what they'll say? Well, you know, all the people with their stocks, they had margin calls and they had to sell their Bitcoin to meet the margin call and blah, 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 right? So that's why you kind of need to keep an eye on that. Plus, you know, Bitcoin trades against the dollar. So if you get a stronger dollar and that dollar persists and persists, at some point it can affect Bitcoin, right? Just like gold is being affected right now. So just something to keep in mind. You can't take trades on that information, but it can give you a sense of what the market can do as a whole, right? And that helps you assess risk. That's the whole point. All right, so let me see. Okay, and Mario, fully agree with Isaac. And well, I appreciate that. I do work very hard. I do want to provide a quality experience, right? I want to provide value for watching my stream. I watch streams out there that are just complete nonsense. I mean, and they get 3,000 live viewers, and people are donating to the guy, okay? And I'm waiting for like something good. I'm waiting for like, is he going to give me some kind of support levels? Is he going to give me nothing? Just rattling off fundamentals. Oh, and this and that. I know this coin about that, and this coin is this, and they're doing this. I know the developer team is doing that, and that. Who cares? Tell me where the risk is, right? How do I assess risk? Tell me, you know, what I can anticipate over the next few days in terms of levels and you know, all that kind of stuff. None of that. There's none of that. So people, these gurus, they know what they're doing as far as rattling off fundamentals, because people like a good story. That's human nature. I'm not popular because I don't tell good stories. I talk about things no one wants to hear about. No one wants to hear about risk. No one wants to hear about technicals. They want hope. I don't sell hope. They want dreams. I don't sell dreams. And they want the sizzle of the steak, right? Well, I give you the raw meat. No one likes that. So that's the way it is. What am I going to do? I'm not going to switch to talk about, I know if I talk about fundamentals, I could probably get a bigger viewership, but I'm not going to do that. I pay no attention to fundamentals. I'm not going to talk about something that I have no interest in, you know, whatever. So anyway, all right, that's my rant on that. So I really appreciate everyone. I think I've answered everyone's questions. I'm an hour into this. I really hope you've got something out of this. I stream twice a week, like I stream on Mondays on TradingView, I simulcast, and then on Thursdays I just do YouTube. So because on TradingView I can't say certain things. I can't mention things. There's house rules I have to follow. So when I'm streaming here on YouTube, I could do and say whatever I want, right? As long as I'm following the community guidelines or whatever. But I could talk about Greenbridge and all that other stuff if I want to. So anyway, that's why I do that. Plus, it's a smaller crowd, so I can answer people's questions better. When I have TradingView on, I get so many questions that I have a hard time answering them all. So anyway, you can catch me then. And plus on Tuesdays, we have Talking Markets where Andrew and Henry come on, and we talk things from more of a fundamental perspective. And as you see, we don't always agree on everything, right? Henry's got his fundamental views and everything. I don't agree with any of that stuff, but it's okay. I don't have to agree. He doesn't have to agree with me. I do my thing. He does his thing. That's cool. But what the benefit that you get is you get to see all these different perspectives, right? And then you can be the judge based on what's right for you, right? And that's the whole idea. Okay, cool. So I appreciate that. Well, thanks, Ian. I appreciate that. Going to make a post, remind me of the next stream. Oh, cool. I appreciate that, Isaac. Yeah, so again, Mondays, same time, right? You can find me on YouTube or you can find me on TradingView. Tuesdays, you could click on, just look at my channel, right? Look at the channel here. You can see the Talking Market show, which is Tuesdays at 4 Eastern time. And then Thursdays again, at 3 o'clock, right? Also, if you want to know more about Greenbridge, you can just click on the show more thing in the profile part of the video, whatever you call that, the text portion. Click on show more. There's all the links there. Again, I have to mention, if you're interested in Greenbridge and you're interested in our signals and stuff, right now it's a slow period. So, I would encourage you to maybe hold off on the sign up if you're very action oriented, because right now there's not a lot of action. The value that we do provide is, we're showing you where the risk is. We're keeping people sitting on their hands, and a lot of our members that have been with us for a while, they recognize this because their performance has changed. And they recognize the value of patience and sitting on their hands and all that stuff because it's produced a result. That's really a lot of this, is knowing when to stay out. And this is one of those periods. So, I don't want people to come to our chat room and stuff and say, where are all the trades? You guys, I thought we were going to go hundreds of trades here. No, we don't day trade. So we share some perspective, things that we're looking at to see if the market wants to deliver an opportunity. But if the market doesn't agree, or it doesn't align with our rules, we do nothing, okay? So I have to point that out. I have to emphasize that because I don't want people coming in with the wrong expectations, because then they do the trial and then they quit and this and that, and they're like, oh, what was the whole waste of time for, right? So understand what you're getting into. If you want action, there are plenty of fake gurus out there for that. Someone just advertised one in here in the chat. Go look him up, right? I'm sure you'll find plenty of action there. Fake guru. Anyway, so I'm going to leave you with that. Thank you so much. Let me see here. Hold on. Thanks very much for. Oh yeah. So Wedge says just click on, if you subscribe to the YouTube channel here, you'll get an email from YouTube every time I stream. So you can always do that too. So thanks, and also press the like button if you like the videos. That also, it encourages me, and at least it lets me know that people do appreciate the effort that I put in. Again, my goal is for you to have a better perspective, a pragmatic and realistic perspective of the market, not a risk from a perspective of risk, not these crazy, ridiculous, you're going to be rich tomorrow type of rewards, which are fake. Okay, it's all fake. Most of this business is fake. You need to understand that. A lot of people out there are fake, especially on YouTube in these public forums. 20 years ago, when I was in this game, there were fakes out there, but not like this. YouTube wasn't around back then and all that stuff. There was no Twitter back then. There was no TradingView back then. So learning to trade was harder. There were some experts around at the time, but again, there were no reviews on people. It was hard to get a sense of people's reputation, so you just had to basically give them the money and hope for the best. That's how it was. Today, you have a lot of opportunity to research people, watch people for a while, and there's a lot of information out there. You just have to be able to separate the nonsense from what's of true value, right? So I'm hoping that I provide true value and not some of this nonsense. I hope people can see that. But obviously, when I see a video that has 3,000 live viewers and 100,000 views, obviously people aren't able to make that separation. Anyway, okay, so again, I'm going to stop with the rant. I just like to talk, and I have to stop talking now. So thank you very, very much again for all of you that joined me today and spend your afternoon with me looking at the market. Enjoy the rest of your day, or the rest of the evening, wherever you are in the world, and thank you very much for watching.